Journey. Journey का zoom करे.
Zoom meeting करता. वो पाता है कशा ही निकल. निम्मा पुरानी. हरी संभालो ना please.
अरे अभी चलो बैठो.
मैं क्यों बैठूं?
सही बात है.
बैठी.
Journey, you hear me?
एक करना just और at least
Do you hear me?
जिससे बात कर रहे हो.
Journey से. हरी. Okay. Janani, do you hear me? So now we were to see from investment options. We saw investment options, I believe it. Rate of interest around market.
Sorry, I forgot to unmute. I was talking to myself the whole time. What I meant to say was we left it at long term. I ate it.
Okay, see, இங்க பாரு எல்லா தோர்க்கும் வந்து they have given you detailed explanation. Like post office savings are a long-term investment. Post office monthly income scheme is a low risk.
Amma,
Yeah.
do one thing, keep all your electronics away because electronics is now echo varum. Okay.
See, post office, they do monthly income scheme. Okay. They're offering a monthly income scheme which has a low risk saving, which is a low risk. And then this can be availed through any post office. It is backed by Government of India. It provides an interest rate of 8% per annum. Okay.
Sorry, I again forgot to unmute. But we finished the whole long-term thing.
Not
We did the post saving, no post office thing. We did the also the bonds and not bonds. We were at bonds.
Yeah,
We were going to do bonds.
Even an elaborate explanation, we just go through it.
जननी तुमने ना जो आपका को ईयरफोन से ना
Okay.
Okay.
Yeah, I can see it.
In the post office is ₹1,000. An additional investment represents of 1,000, like 2,000, 3,000. Maximum amount is 3 lakhs. Lakhs if it is head joint. And again, it has a maturity period of 6 years. That is why it's a long-term instrument. bonus of 10% is paid at the time of maturity. Premature
What
withdrawal
are the
permitted if the deposit is more than a year old. Yeah.
Amma?
Yes.
What are the?
Yeah, in case the inflation grows at 10% per annum, okay,
Oh, okay.
you will be getting only 8%. 2% is the
So
gap,
you'll be suffering a loss.
right? Okay,
But that risk comes with every investment, right?
that is not with every investment. Like
All long term investments.
depends again. Like fixed deposits go through this risk of inflation. Also.
Yeah, but same for the stock market because increase ஆகும் கொஞ்சம் profit கிடைக்கும், but there's still going to be a lot of loss.
Yeah, it's high risk. That is what they say. It's a highly risky investment.
What? Come again?
It's a high risk investment, equity shares.
Oh, okay.
Public Provident Fund, it provides an interest rate of 8% per annum, compounded annually. Okay. And it has a maturity period of 15 years. PPF account can be opened through a nationalized bank at any time during the year and is open all through the year for depositing money. Tax benefits, remember I said about this. Tax benefits can
Yeah.
be for the amount invested and interest accrued is tax free.
Amma maturity period na the period where the money gets collected and move the
Correct.
cost
You can liquidate the investment. Yeah. Okay. These are the revised rate of interest. You can go through them. Okay.
Revise rate now?
Like earlier, some rate would have been fixed, say 4% or 6.9% was 1 year deposit, and now it has come to 5.5. They are paying now 5.
But why did it come down?
Because see,
Shouldn't
we
it
are
go
going
up?
through a period of recession, lockdown, and all those things. The economy is not growing. How
Okay.
can it do this? Yeah,
So when the economy comes down, this period also comes down.
you're right. Yeah. Okay.
The company fixed deposit. Okay.
Right. Now, company fixed deposits are short-term investments to medium-term, like 6 months to.
But you said they were long terms.
Yeah, they've given it in long-term. This is not generally. Then we will discuss.
Sorry.
3 to 5 years borrowing by companies at a fixed deposit, fixed rate of interest, which is payable monthly, quarterly, semi-annually, or annually. Depends on it. It is all based on whatever is the preference of the investor. I can offer any of these. They can also be cumulative fixed deposits, where the entire principal along with interest is paid at the end of the loan period. In the sense, it's a bullet payment, one shot. They don't keep paying in between interest rates. They will pay you at the end of the period. The rate of
Is it a choice?
depends. Yes, again, it depends upon the option that you get while investing. And interest rate varies between 6 to 9% per annum for company FDs. The interest received is after deduction of taxes. I told you this is taxable. You remember when I was talking about this.
Yeah.
These are the company FDs, popular ones. You can go through them. Okay. And interest rate percent also is given. Like Shriram Transport for the year, it pays 8.25. 2 years if you're parking the fund.
Amma,
8.5. Yes.
I'll go through this later on.
Yes.
The statistics எல்லாம் அப்புறம் பார்த்துக்கிறேன். Just இது இந்த
Bonds.
terms தான் எனக்கு தெரியும்.
Okay, Jimmy. Bonds. Okay. Bonds is a fixed income instrument. It is issued for a period of more than 1 year for the purpose of raising capital. Remember, I told you this. They raise for
ஆமாமா.
capital.
You
Yeah.
told me 15 minutes ago. I do remember.
Central or state government corporations and similar institutions sell bond. And bond is generally a promise to repay, IOU they call it. The principal along with fixed rate of interest on a specified date called maturity date.
Amma, listen, I have a doubt.
Yeah.
So bonds only for either government companies, like for the government, or can
Yes,
it also be for G-Segna government securities?
Government bond, treasury bills, And then you have
Treasury bills, na?
treasury bills are instruments which are mutual
Yeah, go on.
funds. Yeah, mutual funds actually are investments which are raised by company, like for public can also invest into mutual funds, and these companies are called as asset management companies. Actually, they're going to pool
Yeah.
its money, and then they're going to collect a lot of money from a lot of public and invest them into companies, equity shares or bonds, depending on the type of mutual fund. Okay. And then they have an objective. Based on that, they are going to invest. It is a substitute for those who are unable to directly invest in equities or debt because you don't have knowledge, you don't have time, or you don't even have enough capital. If you buy, you may buy one share. That one share's appreciation or fall may not be much to you. But if you are going to invest into a mutual fund, they're going to invest into various shares actually. Lot of people like you are investing. Collectively, they are pooled, and that is called as asset. The amount you all have parked is called as asset. These assets are managed by asset management companies who employ professionals who know much about the market, right? And they spend time in analyzing how the economy is going to go, how the market is going to go, which sector is going to be fine and good, which sector is going to fall, all these things, and they buy shares and mutual funds and shares and debentures and other instruments in these companies. That is what is mutual fund. Are you following? Now,
Yeah.
stock exchange is into equity shares. Stock exchange is actually you're selling and buying your equity share. It is actually a secondary market. You should have had primary market first, equity shares, and then secondary market. I will teach you that later on. We'll discuss that in the next class after your test. Okay? Any doubt?
No, only that much.
Only that much, na?
Yeah, only this much.
Yeah, I'm seeing if anything is there after stock exchange. Yeah, okay. I hope you had some this thing.